The Korean government has been working to stabilize the foreign exchange market after the Korean won fell to its weakest point in months, with $1 nearing 1,500 Korean won. For more on this, we're joined today by Professor Shin Se Don, professor at the Division of Business Economics at Sookmyung Women's University. Professor Shin, thanks for joining us this morning.
Good morning.
So to address the volatility in the foreign exchange market, the government is now considering extending the foreign exchange swap agreement, between the central bank and the National Pension Service. Do you think this could help stabilize the weakening Korean won?
Definitely. Korean general public does not understand what is NPS and how big is the foreign assets held by NPS. NPS is, in Korean we call 국민연금. It has one of the biggest amount of foreign assets in the world. I think by now, net assets of foreign assets held by NPS is about $350 billion. $350 billion. And if you assume the 10% return, which was a little higher than 10% the year 2025, the amount of the profits in 1 year is about $35 billion. So that $35 billion, if you divide it by 12 months, that's going to be about about 4 billion, 3 billion, something like that. And if you calculate the amount of foreign investment in Korea, that's about $10 billion a month. And calculating the inflow of foreign capital from outside, that's about $5 billion. So every month we need about $5 billion in shortage in transactions. And if you practice the swap agreement between NPS and Bank of Korea, which is about $4 billion a month, I think that's more than enough. So I think people have to understand that, Korean government and the Bank of Korea and the National Pension System Service has enough foreign reserves to protect whatever, fluctuation in exchange rate. The problem is, most public does not understand the magnitude of potential foreign reserve holdings by NPS. I think that is one of the crucial problems.
I see. So I guess the government is fully prepared. The Bank of Korea says the weakening Korean won is partly due to the increased investment in U.S. stocks by investors, and the government's now considering a tax hike in response. What's your take on this?
Well, the movement of Korean currency, which has been very weak, for the last, I think, a couple of weeks, is because of complicated reasons. There's an increased demand for dollar. One of the reasons is, NG's, foreign investment, which expects an outflow of capital. But there's another reason that there's a reduction in supply of dollar. In other words, inflows of capital has been increasing recently. To me, the most important reason is that the yen has been very weak, for the couple of months. It reached 157 one time last week. So when yen gets very weak, there's a tendency that Korean currency also gets weak. So one of the crucial reasons that Korean won has been pretty weak is because of the yen. So if the yen gets stronger, I think the Korean currency will also be stabilized in the future. And to the issue of tax, I think it is pretty what to say? I think it's careless, I think the government officials are taking too lightly about taxing any kind of income. I think it is premature at this time to think about taxing, investment income from outside. I think it is premature decision on the part of the government, and I think it is very imprudent mention on the part of the government official.
I see. So a lot of things to consider before proposing the tax hike. And the International Monetary Fund, IMF, says South Korea's GDP in U.S. dollar terms, used for global comparisons, appears to have shrunk. while even though nominal GDP in Korean won is projected to grow by around 2% this year. What's your take on this? And do you expect the weakening Korean won to have a greater impact on the economy next year?
Well, I think you have to consider the case of Japan. In Korea, many international statistics are represented by dollar terms. We have to calculate, Korean currency value into American dollar using exchange rate. But in the case of Japan, they are sticking to yen. No matter what is the exchange rate, the Japanese government always represents their economic statistics in local currency, which is the yen. So to me, the fluctuations in GDP in terms of dollar, it doesn't really matter because for most Korean, we don't have the opportunity to change or to be exposed to international transactions. So even though dollar term GDP has been in the negative region, I think it doesn't make many sense. So we shouldn't care pretty much about negative decrease in dollar value of GDP. In terms of trade, usually if the Korean currency gets weaker, it's going to give a little bit of a boost in the competitiveness. The problem is, Japanese yen has been depreciated faster than Korea, which means that Japanese products become much more competitive against most of the country, including Korea. So I'm expecting that there's going to be very little, beneficial effect on trades because of the Japanese yen. Otherwise, it has a negative effect that, we have to import a lot of raw material from the outside, and the cost of import of raw material from outside has to increase because of the weaker currency. That, I think, is going to induce inflation, and that I think is going to have a negative effect. So in all, I should say that high, increase in the Korean currency is going to have a, negative effect on Korean economy.
I see. I guess we'll have to see how the economic situation turns out next year. All right, Professor Shim, I'm afraid that's all the time we have for today. Thank you so much for your insight this morning. We appreciate it.
My pleasure.